Politics and economics are decuminate. US stocks and FX are decuminate.
Welcome to the Deep Dive, where we take the stacks of investor notes and corporate filings you share with us and try to turn them into some actionable insight.
Right.
Today, we're doing something a little different. We're not tracking drug development, not really. We're tracking corporate body language. We're peeling back the layers of investor relations strategy, which, is often where the real intent gets whispered long before any big public announcement.
That's exactly right. Our focus today is on analyzing what management does, not just what they say. We're looking at Recursion Pharmaceuticals, RXRX.
And specifically,
the strategic meaning behind their decision to show up at two major investor conferences, basically back-to-back this November.
Okay, so our mission here isn't to try and guess the clinical data.
No, not at all.
Our mission is to study the strategy. What does this really aggressive timing and the format of these November meetings, what does that tell us about RXRX's confidence,
Right.
about their prep for what we know is coming?
And what's coming is a critical, super high-stakes data release scheduled for December. The stakes couldn't be higher, really. In biotech, data is everything. It moves the stock, it drives financing, partnerships.
Everything.
So when a huge catalyst like this is just around the corner, you start to see management behavior shift. And we need to be watching for those shifts.
All right, so let's set the stage. What exactly is an investor conference in this world?
Okay, so let's define the environment. An investor conference is, well, it's more than just a public talk. It's a key venue where companies present their latest info, but not to everyone.
Right, not to the general public.
No, this is for institutional investors and analysts, the people who, actually control huge amounts of capital.
And the biotech industry has its own flavor, doesn't it? It's not like some big tech presentation.
Oh, totally different.
Yeah.
These events are often very specialized, they're invite only, and they're really dominated by these intense private one-on-one meetings.
So the management team literally sits down across the table from people at individual funds.
Yes. The people who decide whether to hold or, dump millions of shares of their stock.
That one-on-one format seems to be the key thing here.
It's the distinguishing feature.
Yeah.
Lets management talk directly about strategy, their pipeline, what's next, and they can tailor the message.
Yeah.
And because it's all non-public, there's usually no press release required.
Which, okay, that opens the door to some interesting interpretations. Our source material mentioned this concept, Mitsudan. Private discussions.
Right.
And this isn't some conspiracy theory, right? It's just how capital markets can work.
Exactly. This non-public setting lets management have conversations that might, theoretically encourage friendly institutional investors, the ones they trust, to maybe buy some more stock or at least hold on while the price is still relatively low.
Before some big positive news they know is coming.
And we have to stress, just like your sources did, this isn't illegal. As long as they're not sharing material, non-public info like the actual hard data numbers, it's okay. It's strategic guidance, not insider trading.
But wait, how do we know this isn't just routine? I mean, all companies go to conferences.
That's a great question. And it comes down to the company's own history. RXRX, like a lot of savvy biotechs, they tend to save the truly game-changing stuff.
Like a huge new partnership or final trial results.
Exactly. They save that for its own dedicated press release or a big earnings report. So the mere act of aggressively scheduling two of these events back-to-back, that becomes the signal.
So it's not what they're saying on a public stage, it's the effort they're putting into all these private meetings.
Precisely.
Okay, so walk me through the timeline here, because that's what makes this so compelling.
All right, so this all got announced with their November 4th earnings report. And they didn't just say they were going to one conference.
They announced two
major events. And they basically bridged the gap perfectly between that earnings report and the critical data release in December.
Okay, what were they?
First was the Guggenheim conference on November 11th. Then, just a week later, the Jefferies London conference on November 18th.
So not a casual schedule. This is a very deliberate back-to-back roadshow.
It is a high-frequency commitment to talking with institutions, and it spans two huge financial centers, New York and London.
Which really brings us to the core puzzle. Why do this? Why this flurry of activity? Why spend all that executive time and money on two big conferences right after earnings? And just before the biggest data drop of the year.
It's a strategic choice. It absolutely is.
Feels very prepared, very aggressive.
In the world of pre-catalyst biotech, executive time is gold. They could have done one conference, they could have done none. The fact that they're doing two and doing them globally, it signals one of two things.
Okay.
Either they're intensely nervous and trying to control a bad message, or they're overwhelmingly confident, they have a great story to tell, and they want to lock in support early.
And based on history, which we'll get into, it usually points toward confidence.
Usually is.
All right, so let's unpack what this schedule implies. What's the first sort of most straightforward interpretation here?
I think the most straightforward read is simply operational readiness. It signals that, information disclosure is ready.
And what does ready actually mean for a company like this?
It's crucial. Ready means the data from development has been gathered, it's been analyzed, it's been packaged. And the story around that data, what comes next, how it fits in the pipeline, that's all been locked down.
So they're not going to these meetings to figure things out. They're going with a plan.
Exactly. They have a lockdown strategy.
Yeah.
And that shows proactive confidence. It's not hesitation.
Okay, that makes sense. But it feels like there's more to it than just being ready. The timing is just too perfect.
Oh, absolutely. And that brings us to our second and maybe the most powerful interpretation here. Pre-contact. This is about setting the table before the big meal in December.
And let's remind everyone about that December data. It's pre-NDA data.
Which is a huge deal. This isn't just some early stage results. This is the kind of data that informs your path to a new drug application, the final submission to the regulators.
So this is formative stuff for the company's entire future.
It is. So going to two major conferences right before this, it just screams a clear intent to make advanced contact with key people.
And again, the one-on-one format is how they do it.
That's the mechanism, yeah. They're targeting their existing shareholders, the big institutions, maybe some potential strategic partners, and they're giving them the context privately.
So that when the actual data drops in December, these key players aren't just seeing cold numbers.
Right. They already understand the company's conviction, the strategy behind those numbers. That's the key distinction. They can't go in there in November and say the efficacy number is X.
That would be illegal.
Right. But they can share the non-confidential stuff, like, the timeline for future trials, their plans for partnerships, and just the general trend that the data is supporting.
The logic here seems pretty simple.
It is. If the data looked bad, or even just mediocre, you wouldn't be out there actively booking meetings. This timing suggests they think the data is good enough to warrant a full-on communication blitz.
And this all has to connect back to the money, right? There's always a financial angle.
Always. Which brings us to the third interpretation, paving the way for future funding. The source material called it Jinarashi, like leveling the ground.
And RXRX, like any deep biotech, they burn through a lot of cash.
A significant amount. And this is probably the most rational explanation for this kind of aggressive investor relations. Think about it. If the December data is good, what happens to the stock price?
It'll jump.
It'll rise, maybe dramatically. And a higher stock price changes everything when it comes to raising more money.
So break that down for me. Why is a higher stock price so important for raising cash?
Because they raise cash by issuing new shares. It's called equity financing. But that dilutes the value for all the existing shareholders.
Right.
So if your stock is at $10, you have to issue twice as many new shares to raise $100 million as you would if your stock was at $20. More shares means more dilution, and investors hate dilution.
Ah, okay. So the goal is to make any future fundraising as painless as possible for their current backers.
Precisely. By getting in front of institutions in November, by privately signaling confidence, they are maximizing the chances that the stock performs really well after the December data hits. They're doing that Jinarashi, preparing the financial ground.
So when they do need to raise cash, they can do it at a much higher price.
Causing a lot less pain for their loyal investors. It is a highly rational, very calculated financial move.
So if the strategic reasons all point in one direction, let's look at the behavior. We can learn a lot by just looking at what companies avoid doing when they have bad news.
Yes. This is where we go from strategy to a bit of corporate psychology. Just flip the scenario.
Yeah.
Imagine a company that knows it has poor data coming.
They hide?
They hide. They avoid conferences. They go into a quiet period. They cancel travel and high-level appearances because they don't want to get grilled by analysts. Why would you invite that hostility?
But RXRX announced 2 back-to-back high-profile events. They're walking toward the scrutiny.
Which strongly suggests that any major negative factors are, at the very least, minimal. If they had a train wreck of a data readout coming, the executive team would be in a bunker doing crisis management, not flying around the world taking meetings.
Their travel schedule alone is a signal of confidence.
It is. It signals they're ready to field tough questions, and that only happens when you feel good about your answers.
Okay, let's go back to the format. We know the one-on-ones are key. Why is an increase in these private meetings such a strong tell for good news?
It's all about executive bandwidth, time. If management had nothing important or positive to talk about, spending hours and hours in dozens of these private meetings is a colossal waste of their time.
They just wouldn't do it.
They wouldn't bother. Committing that much time and travel right before Catalyst means they believe they have concrete, positive things to share privately. Even if it's not the final numbers, they're getting ahead of the story.
Now, here's a detail that I found really interesting. It wasn't just about the private meetings. The sources confirmed RXRX also announced a webcast, a public broadcast.
This is so critical. A company with bad news tries to minimize its public footprint. They want to fly under the radar.
But setting up an open public event.
Even if the presentation itself is pretty high level, it signals immense confidence in their overall message. It's basically an open invitation to the public to listen in. It shows they're comfortable with transparency, even while they're having those critical one-on-ones in the background.
And finally, what about their own history? Have they done this before?
They have. RXRX has a track record of sort of consolidating big events and ramping up their IR activity right before major positive news.
Like before their download day events.
Exactly, and other key milestones. When a company repeats a strategic playbook, especially one that's expensive and time-consuming for the top executives, it usually means that playbook worked for them in the past.
So if you connect all those dots, the timing, the focus on one-on-ones, the public webcast, their own history, the only conclusion that really makes sense is that RXRX is making positive preparations for December.
It's the most rational read of their actions, yes. It's the complete opposite of crisis management. The whole pattern, the IR moves, the timing. It's all totally inconsistent with a company that's trying to hide something bad.
They're managing expectations upward.
And strategically priming their most important investors for what they hope is future success.
It's really a masterclass in strategic communication. It shows that sometimes reading the calendar can be as important as reading the press release.
But now we have to circle back and add the necessary caution, just like the sources did.
Of course.
This analysis is based purely on their corporate actions, on the timing, on what we know about how markets tend to work. It is not a guarantee of a certain outcome. And it's definitely not financial advice.
We are simply interpreting the language of their movements.
Precisely.
Okay, so building on that, here's a final thought for you to take away. For a company like this, a biotech whose stock lives and dies by the news, how much weight should an investor actually put on the format and timing of their communication before an announcement? Is watching them double down on these kinds of meetings a better leading indicator than just waiting for the actual data to drop? Or is it all just noise?
That is something to mull over as you track the markets. Because that ability, to read the unspoken language of how a company deploys its time and capital, that's often the difference between being informed and being well informed.
A great point to end on. Thank you for sharing these sources with us and letting us take this deep dive.
My pleasure.
We'll catch you next time.